Hello dear traders, this is another day that God bless us with it, and today I want to give you some trading tools, that is trading strategies. But before going there, make sure that you subscribe our YouTube channel so as to be notified for the upcoming next video. Okay, so today let us see, let us base on the trading tools that most traders are using in trading. We know that in trading there is a lot of trading tools that are being used in trading. People, they use ICT, and some they use ICT plus what? Plus ICT ICT plus smart money concept. They use ICT and smart money concept. But some they use BTMM. It means bit market maker, market makers, and some they use Ariot wave. Some they use Ariot waves. Those are trading tools that people use in trading. But some they use Boringo band and moving average, Boringo band and moving average. We say BBMA, that is Boringo band and moving average. So those are tools or strategies that people use mostly in trading. So what am I going to base with it today? Today I'm going to base with those methods, but in a simplified way. We know that in trading we deal with marketing. We say we deal with market cycle, a market cycle. What is a market cycle? What is market cycle? Market cycle, we say there's the path. We say it is a path. It is a path in which market is directed in what? In a calculated manner. We say calculated manner. Okay, we say it is a path in which market it is directed in a calculated manner. So as we see in ICT and smart money concept, we say there is a smart money concept level. In BTMM we say there is a Mauro levels, right? Then in Ariot wave we say we have Ariot wave. We say Ariot levels. As we know that we have an impulse correction. Those are what we call market cycles. So we are going to deal with this cycle in very deep way. Right? I think you get me. Let us start with BTMM. Let us start with BTMM right here. Let us start with BTMM here. Let us start with BTMM. We say in BTMM we have three levels. We have three calculated level, calculated calculated level. We have 3 calculated level. Now we have 3 calculated level. As BTMM, we say we have 3 calculated level, but what you have to know, we have the formula. We have accumulated formulated structure, or we say we have the formula that you direct this calculated level in a certain direction of market. Let us see. Let us see here. This formula. We have 2 formula. We have 2 formula. We have 2 formula. Let us see here. Formula of we have formula of BTMM. Right? We have formula of BTMM. Alright? Then now we have 2. The first one, we say we have M, V like sharp, alright, then M, alright. As we know that we have in market general, in market direction, we have 2 things. We have reversal pattern. We have reversal pattern. We have reversal pattern. We have reversal pattern, and we have continuation pattern. We have continuation pattern. We have also continuation pattern. So we have two things. We have reversal patterns and we have continuation pattern. How this works? Listen to me very, very carefully, and you have to note something on your notebook that I'm going to explain here. So those reversal patterns and continuation pattern, how do it works? Let us start with this formula 1 of BTMM. Just look here. We have as we have here. Let us write it here. We have M, then V right sharp, then M right sharp. Alright, this is formula 1. Formula 1. As we see that if we have, this is reversal pattern, maybe market comes from here, then moving in shape like this, then okay, moving in this way and this way. Alright, then okay, let us use this pass. Let me use this pass. Alright, let me use this pass. Okay, we have a market. This is what we call M structure, that is used as a reversal patterns. As we know that here is what we call, it is a neckline. This is a neckline. What we call, it is a neckline here, a neckline. And after breaking that neckline, we expect the market to retest this neckline. As you see here, this is what we call V-like. This is V-like structure, this one. Alright, and it is used as a continuation structure. Alright, then market will be falling in this way, in this way, in this way. Then we have another V-shaped structure. Then we have a continuation. This is what we call, this is level 1. This is level 1. This is level 2, and this is level 3. This is level 3. All right. As we see here, we have impulsive. We have impulse. Then correction, collection, then impulse, that is the impulse collection. So market move in such a way that they if you have a correction, the upcoming move will be the what? The impulsive move, or the impulsive wave. All right. So here in BTMM we say this form of market, it is what we call it move in MVM structured form. All right. Then look here now. In this structure here, as we know that in correction form, we have different structures in the correction form. That is, maybe you will be having a triangle. Maybe we will be having a triangle right here, or right here you can be having a rectangle. All right, a rectangle right here, and any other form of correction. Sometimes you have flag, that is what we call zigzag, a flag, that is what we call a flag, or zigzag, a zigzag. All right, or zigzag. And let us see how triangles look like, how triangles looks like. All right, let us see how triangles looks like. And if you have a triangle, we say a triangle, or maybe a triangle like here, we'll be having this structure here. All right, this structure here, as you can see here. Maybe market comes from this side here and inside this rectangle, and this will be falling in this direction. As we can see here, a triangle, inside the triangle we have a structure A, B, C, D, E. We have A, B, C, D, E structure that is collected inside a triangle. As you see here, this will be a point 0, will be A, this is B, this is C, this is D, and this is E. The upcoming move after E will be the aggressive move. And sometimes you will be having, instead of having a triangle, we will be having a rectangle. A rectangle also, it is a continuation correction that can be used by market maker to direct in a certain move the market. Then this will be like this, as you can see. Is inside rectangle we have ABC structure, and sometimes rectangular have the same structure as a flat collection. And as we know, we have 3 kind of rectangle or flat correction. We have expanded flat, we have normal flat, and we have a running flat, or a running rectangle correction. All right, as you can see here, this will be a point A. This is 0. This is point A. Then this will be a B, and this will be the point C. Then after point C, we have an impulse after that correction. So those correction comes after the impulsive move. So after impulsive move, we have a correction, and after correction, we have impulsive move. All right, I think you get me. Right there. So this is a formula 1. This is what we call formula 1, and this formula 1 is that we use in a bearish move. We are using it in a bearish move. We use it in a bearish move. Bearish move means we use in a sell structure. In a sell structure, we use it in a sell structure. So then after structure 1, we will be having structure formula 2. Formula 2. We have structure formula 2. That is, what we call, we have W, M like W like structure, then A like structure, and we have W. We have W right here. Then now, this structure is what we are using in bullish structure, or we use to buy. We say buy structure. Buy structure is what we call, we use in buy structure. All right. Then now, how it is structured in a market. It is looks like, as we see here, that the market is moving in this direction. This is with what we call W. Some they say it is called double bottom. It is called double bottom, and this is, if this is a double bottom, this is what we call a neckline. A neckline. Then it will be retested back. Then the market will be going up. Then it will be going down, then up. This is what we call A like structure. A like structure, and this is what we call a correction. This is a correction move, and this one is, this is called correction move, correction move, and this is what we call impulsive. This is called impulse move, and this one is called an impulse move. So if we have this structure, look here below. Let us use this path here. Then the market, if we will be moving in this direction, we will be having this structure. Alright, this will be W, then this will be our neckline. Then the market will be moving in impulsive way. This will be using, as we see here. So this is what we call a neckline. This is what we call a neckline, and this is what we call this is called invalidation in smart money concept or ICT, and this up here is called validation. It is called validation. This is invalidation, and this above here, this is what we call validation. This is validation. So let us forget about this validation and invalidation. Let us deal with what we was dealing with it. This is what we call BTMM Mauro levels. This is what we call level 1, and this is what we call level 2, and this is what we call level 3. Alright. Now, in this correction also, we will be having a certain structure inside. Maybe you will be having flag, as you can say, we said before, a flag. As we know that flag or zigzag structures are being categorized into two. We have a bearish flag and bullish flag, or we have a bearish zigzag structure and we have a bullish zigzag structure. Zigzag, inside we have inside zigzag we have A B C D E structure. Inside we have A B C D E structure. Alright, but the flag also we have A B C D E structure. And as we said that also in in a triangle we have ABCDE, but in a rectangle we have ABC structure, and also in a flat correction we have ABC structure inside. All right, but what you have to consider or to note here, you have to note the following. You have to note the following here. The first thing to note is the first one you have to note is that level 2 sometimes I say sometimes is longest level as a longest level, sorry, level is a longest level than we say level 2, sorry, level 2, to say we say level 2 is the longest level than level 1 and what and level 3. So we say level 2 is longest level than level 1 and level 3. It means if we will be having this structure here, sorry, maybe if we will be having this structure here, this will be level 1. After level 1 you will be having a correction, maybe will be a zigzag. If this is A, this is B, this is C, this is D, alright, this is D, and this is E above here. And this structure will be moving impassively, and this is what we call a zigzag structure. So this level 2, this is level 1, then this is level 2, will be the longest level than level 1 and level 3. After level 2 impasse, we will be having also a correction, then we will be having another impasse. So this level 2 will be longest level than level 3 and level 1. I think you get me. And if this is for a bearish move, and if it is a bullish move, then this will be a level 1, then level 2, then a level 3 here, as you can see here. After this will be level 1, this is level 2, this is level 3. Then a level 2 will be the longest level than level 1 and level 3 here. I think you get me. All right. This is what we call BTMM. And the second one, the second thing you have to note right here. Look here, ladies and gentlemen, what are we drawing inside the market chart? All right. The second thing you have to note here is after having level 2, after level 2, after the formation of level 2, we have here a deep pullback, deep pullback. We say deep pullback, a deep pullback. Yes, deep pullback. Okay, deep pullback, right here. We have a deep pullback. All right. As we see here, maybe look here. This is skeleton here. We are going to look on a live chat. Don't worry. I'm here for you. I'm here for you, ladies and gentlemen. Look here in this skeleton. If we will be having this skeleton here, maybe this is. Let me use this part here. Okay. Maybe this will be a pattern. As we see, this is reversal. This will be maybe a level 1. After level 1, maybe we will be having this pullback here. Then we will be having a level 2 right here. Then the pullback after level 2 will be very deep, then the market will be moving down. Alright, as you see here, ladies and gentlemen, here this is what we call BTMM structure. Alright, then as you see here, this is a pullback or correction after level 1, here, after level 1 here. This is just a skeleton, don't worry. Alright, this is a pullback after level 2. This is a pullback right here. Okay, this is, so as you can see here, this is a deep pullback compared to this one, and will cover a lot of people. We have a lot of people after a lot of people fall back after level 2. As you know that this is level 1. This is level 1. Okay, this is level 2, and this is level 3. This is level 3. So there's two things you have to note it properly. Sometimes there's those noted things should be ignored or should be considered in such a way that we have a certain market that moves aggressively. We say a straight away market. What how do I mean when I say a straight away market? A straight away market, I mean that the market which have got a slight pullback, slight pullback inside, a pullback inside, a very small pullback inside. We have, maybe you will be having this pattern here and this aggressive, then a certain pullback, very small pullback, then you have a slight very small pullback, then this move right here. So we say there's noted rule should be sometimes ignored. So don't be a slave of these noted rules. So let us look on a real chart, how these levels looks like. All right. Let me maybe use this chart. As you see here, we have euro yen. We have euro yen, ladies and gentlemen, here. Okay. We have euro yen. Okay. As you see here, you see here, we have a reversal structure here, right here. This is what we call a double bottom. In a skeleton, we have this move here, this move from here to here. This is a move from here to here. Then this move upward here. This is a move from here to here. Then from here, then the market was pushing up, as you can see here. So this is what we call W or W structure. All right. Then as you can see here, we was having this structure here above here. So if you look it properly, right here, after this W, we was having aggressive move here, this aggressive move here, then this was a pullback, then this aggressive move, then a pullback, then aggressive move. Okay, so this is the impulsive correction, impulsive, then correction, impulsive. All right. So let me minimize this chart. Okay. As you can see here, this is what we call, this is level 1 here. here after level 1 we have a correction here, then we have impasse here. This is correction. This is the impasse that have inside have a certain correction, a minimal correction inside. So this is level 1, this is level 2, and this is level 3 right here. This is level 3. Alright, we have a certain move or pullback inside impasse, impassive moves, as you can see here, from here to here to here. You have a correction right here, then you have impasse, correction, impasse, correction, then impasse, and inside here you have the correction, then impasse, correction, impasse, correction, impasse, correction, then impasse, correction, then impasse. Alright, don't worry here, don't worry. Look here, look here. But if if you meet with such condition, you can see here we have this, maybe, sorry, let us use, maybe if you will be having this as a reversal structure, and we have inside a certain move, a correction move here, then impasse, then a huge correction, then a certain impasse here, that we have impasse inside, then a huge correction, then another correction here, then impasse here, then a correction, then maybe you will be having the reversal here, then you will be having that correction, then this correction, then impasse, then correction, correction right here, correction right here, then impasse. Alright, you will meet a certain market like this, that we consider that this is a level 1, but inside the level 1 we have impasse, correction, impasse, correction, impasse. Alright, then this is level 2 here, this is level 2, but inside we have impasse, correction, impasse, correction, impasse, correction, then impasse. This is what we call BTMM, ladies and gentlemen. And here we have another impasse here, that is level 3, level 3. This is level 3, but inside we have impasse, correction, impasse, correction, impasse, then we have pullback, then impasse, and we meet with this double top here, which that is what we call reversal patterns. Okay, and then you have a new count rate of levels. This is what we call level 1, and this is what we call level 2 here, level 2 here, level 2, and this is what we call a level 3, level 3 right here, level 2. So if you get me right here, you have to categorize this level into 2 types. We have 2 types of levels. We have 2 types of levels. We have 2 types of levels, ladies and gentlemen. Here we have what we call first type. We have a major level, a major level. This is what we call major level, and we have second one. We have a minor level. We have a minor level. We have a minor level inside. So okay, minor level inside. So what those major level looks like and those minor level looks like, but you have to know that minor level are inside major level, and this major level produces this minor level. I think you get me. If you will be having look like okay, look at this one. Maybe you will be having a structure here. This is maybe the impasse, and you have a correction, then impasse, then correction, then impasse. Okay, It means this is level 1, this is level 2, then this is level 3. And this one is what we call the major levels. This is what we call a major level. There's the major level right here. And inside major level we have a minor level. You will meet the market moving like this. This is the correction. Maybe inside the correction we have another correction. Then inside the major you will be having another correction right here. Correction after correction, then impulse. Then inside the correction we have another correction right here. Then we have impulse. Inside the impulse we have correction. Then the market is moving up. Then inside here we have correction. Then after impulse we have another correction, impulse, correction. Inside there's major levels. So inside there's major levels. We have minor level, and this minor level sometimes you meet that also moves in 3 models of BTMM. It falls in that mode of what? Of BTMM. You will meet that it is moving, that this is level 1, level 2, level 3, then correction, then level 1, level 2, level 3, then correction, then level 1, level 2, level 3, then correction. This also moves in the such a way that they follow the BTMM structure. As I think you get me. Now, don't hesitate if you will be counting that maybe you have level 1, level 2, level 3, then you get aggressive pullback. After aggressive pullback, then you will be getting aggressive move. Aggressive move, that is the impulsive move, that inside you will be having impulse correction, then impulse. So don't worry, there's the formula of BTMM. For that BTMM level, I think you have something in your mind or inside your brain now. So let us maybe look on another chart, here. Let us maybe look on let us look on maybe on AUD Australian dollar versus US dollar. Maybe let us look on this one. Okay, let us look it on day one. All right, on day 1, as you can see here, we have maybe this is ladies and gentlemen, look here. We have maybe this is what we call, this is level 1 here. This is level 1, and this is level 2, and this is what we call level 3 right here. Level 3. So this is level 1, level 2, then level 3. This is correction here inside, and this is a correction inside here. Here this is a zigzag correction, and this is what we call a flat. That is we say a running flat. This is a running flat correction, then this is an impulse. So as you can see here, look here now. This is an impulse. After this is a double top here. Here above, this is a double top. Here a double top. Then this is an impulse. This is level 1, then level 2, then a level 3 here, right here. And here we have what? Aggressive what? A Raja correction. This is what we call a ranging. All right, this is a ranging. But you will be you will be maybe you will be looking in a certain aggressive move down here. All right, down here. Why so? Let me teach you something here. All right. If you get me on the previous, we said this will be said as we will be level 1. This is how do we call? We will be having level 1. Inside level 1 we have impassive correction, impassive correction, impassive. All right, this is level 1, and this is the correction after level 1. Then we will be having aggressive level 2. Level 2 right here, level 2. But inside level 2 we will be having in a momentum right here, that we will be having impasse, correction, impasse, correction, then impasse. All right, then this is what we call level 2. all right. Then I think you get me. Then now after level 2 we will be having a large correction here. Then the market will be moving down, will be moving down here. Okay, now we will be moving with it down here after a certain level 2 above here. All right, then I think you get me. So here what we was trading it, what we see here, as we said, this is a rectangular, or we say a flat. This is a flat here. We have a flat correction here, or a rectangle here. As we said that this is an impasse, then this is a correction. Inside we have, this is A, then this is B, this is C. Then we will be moving down here. All right. Then now, as you can see that this is we will be having, this is A, this is A, this is B, this is C. Then the aggressive move, we will get aggressive move down here. All right. This will be A, then B, then C, then aggressive move. I think you get me, ladies and gentlemen. Let me end up here. Make sure you subscribe our YouTube channel, and maybe you share with your friend there, so as they can get this knowledge. I can say goodbye and God bless you. Thank you for listening, and I think you have something in your head.